Hey, it's Mack with PriceActionTradingSystem.com, and it is Monday. It's February 24th. This month's almost gone by on us, and of course, February is a short month. Um, but the market continues to move pretty well lately. Today was the kind of day that you really like. I mean, this is as easy as it gets right here. This is a really easy trading day. I was done with my trading by 9:30, something like that. And I told you when I get through earlier, if I have time, I'll hang around and take some trades and that I'll show you. That even after trading starting after 9 o'clock, you can find your two trades. I found two quick trades today, and took those, and I'll put those on the chart and show them to you, just to show you it can be done. You don't have to come in here at 7. You don't have to sit here all day. You can make a good living trading. Um, just you got to learn to do this, and you got to learn to spot them. But on days like this, sometimes it's just really easy. And but there's two trades out there every day that you can find without much to do, and you just got to learn how to do it. And I want to say one other thing before I get started on today's chart lesson. Um, I see this over and over and over. But what people do is they try to learn what we're doing, but they still try to apply rules that they've learned and picked up somewhere else. And I see this over and over and over, so I'm not using this to pick on this one particular person that sent me an email, but just to give you an example, people will send me an email and they say, um, I'm trying to follow and learn what you're doing, but I'm going to use this. I'm going to use fibs for my targets, or fibs for my reversals, fib levels and things like that. And fib levels, there's something to them. I don't know what, but you don't need them. And you don't want to be trading by them because you want to follow what the price action is telling you and nothing else. That's just one example, but just to show you this particular trader, there's an old trading rule out there that says, hey, your stop can't be any bigger than your target. And he's not the only. I hear this one over and over and over. I read it for years and believed it. And sure, if you're only getting it right one out of every 4 or 5 trades, they're exactly right. For money management reasons, your stop can't be bigger than your target. But we're only trying to get 4 ticks here. If you can't get 4 ticks, then you've got other issues. There's something else going on. It's not that hard to get 4 ticks, and especially when your stop is going in the right place. And the idea is the stop has to go below the signal bar. This was a signal bar on this trade. This was a signal bar on this trade. This was a signal bar on this trade. This was the signal bar on that trade. This was the signal bar on that trade. This was the signal bar on that trade. And this was the signal bar on this trade. So if your signal bar, once you enter that trade, if you put your stop below that signal bar, none of those trades, not any of them, took any heat. None whatsoever. This one would have taken a little bit of heat, but it never would have got close to your stop. Most of these wouldn't have even taken any heat. It just went on exactly. But there's a reason we teach putting your stop below these spots. Look at if you look at most of these trades, this one in particular, if you went along here and you kept your stop somewhere sides below that, you got stopped out only to watch it go exactly where you thought it was going to go. So we have some rules in place. Those rules are there for a reason. If you want to try to do halfway what we do and monkey with the rules, I'm just telling you, you're probably going to lose money. What you have to do is take what we're teaching and use it 100%. You can't pick and choose from what we do and try to figure it out on your own. If you could already do that, you'd already be profitable. Trust me. I don't know any other simpler way to say this than to say that we've worked on this, we've perfected this, it works, we've proven it works. Other people have done it and proved it works. If you want to take it and monkey with it, I'm not going to tell you not to, but I'm going to tell you when you don't have success, don't ask me why you're not having success. If you're taking the rules and you're monkeying with them and you're having success, that's great, because I get that every now and then. But it just so happens these people are luckily they're monkeying with the rules in a positive way. But most of the time you can't change what we do to make it work any better. And I'm just going to tell you, especially when it comes to your safety stop, we don't want to use more than a 2-point safety stop simply because when we are wrong, we don't want to lose we don't want to lose too much. But you have to put your stop where it goes or you're going to get stopped out on too many trades that would have worked. The problem is if you're not putting your stop in the right place, um, you could get stopped out on just noise. Um, if you're keeping your stop too tight, if you're only going to go for 4 ticks and you think you've got to keep your stop within 4 ticks or 6 ticks, and that keeps you from putting your stop below your signal bar on each, just to say on each of these trades. But look, on each of those trades where I just showed you the signal bar, prices never went below that point ever again. They got close right here, but they never went below those points. Right here it got close, but it never went below those points. There's a reason why we teach that. You're using the actual price structure to help hide your stop. Now, if you're picking the wrong spot and you're getting long and you're entering there, it's a possibility that, yeah, it's going to go below your signal bar, but you weren't reading the price action properly. You were wrong. And so you got stopped out, not because your stop was in the wrong place. You got stopped out because you read it wrong. So make sure you distinguish between those two. If you're putting your stop in the right place and you're reading the price action right, you're going to get it right almost every time. But if you put your stop in the wrong place and you're reading it right, you're still going to be reading it right sometimes and getting stopped out anyway, just because you're not following the rules. You're not doing what you're supposed to be doing. But what normally is happening, and the reason people believe these rules of your stop, money management and your stop not being bigger than your target, that's because you're not entering in the proper places, and you're going to lose money every time regardless. It's not because it's not really your stop that's causing the loss. The reason you're losing is you're not reading the price action right, and you don't quite understand what we're doing yet. So I hope that all makes sense and you can clarify that. And I spent 8 minutes on this almost, but it's so important. If you want to learn how to do this, just follow the rules step by step. Don't question them. Don't doubt them. Just try it and see what happens. You're on the simulator anyway, so what difference does it make? And if you're not on the simulator, then you got other issues because you're just going to give your money to somebody else. And you're going to just slowly transfer your money. You may not even do it slow. You may do it pretty quickly because we have people do it all the time. That'll come to me, and I told them, don't trade live. And they'll come to me and say, I lost it all today. I didn't listen to you. I lost it all. And I know how eager it is, and that's part of why people lose is because they're eager. If you're eager and you still feel that emotion and it's exciting to be trading, you're trading for all the wrong reasons. This is boring. I can't tell you how boring it is. And that's part of the reason I do this teaching, because to me, trading is boring. And that's the point you got to get to if you're really going to make money, because if it's exciting to you, like going to the casino, then you're emotional, and you're never going to make it emotionally in this business. Sometimes these conversations, I call this getting on my soapbox, and some of you will laugh by me saying that, and I'll laugh at myself. But some of these times, when I get on my soapbox, literally some of those episodes are the most important thing you'll ever learn about trading. And I mean that. So, go back and listen to this a few times if you need to. But it's important that you follow the rules the way we teach them. And if you monkey with them, you might come up with something better. But 9 times out of 10, you're not. And most of the time, it's going to keep you from ever getting successful. We've already got a successful strategy here. If you just follow that strategy, we've proven over and over and over that people can make money doing what we do here. So the most important thing you do is follow this strategy. Don't change the rules and forget all this stuff you learn everywhere else, because 90% of those people are losing money. And they believe these rules of Of, and that's a big one. They believe that, you hear this thing about money management. Your stop can't be bigger than your target. Well, okay. If you want to believe that, like I said, it may be true in some cases, but it's not true in what we do here. And if you want to believe that it is, keep following it and see if you can make any money. But I'm guessing you probably never will make money. So, and I'm not beating up on anybody. Don't take this the wrong way. I'm saying this because I want to help you and I want to see you become successful at this. So to do that, you got to forget all this stuff you read. Listen, I've said this before, and I'm going to say this again. I have nothing against trading forums. There's some good ones out there. But I'm just going to tell you, most of the people that are teaching you things on there and that are going there because they're losers. They're not making money. People that know how to do this and make money every day don't spend their time on any forums. I'm not a member of any trading forums. I don't have any interest. There's nothing there for me. And that's the way most profitable traders feel. They don't, if they go there and they try to teach this stuff, they're persecuted because it doesn't fit the mold of everything you've been taught and heard. And, I'm not going to sit there and say it's a racket because it's probably not. I think people have good intentions, but there's nobody there that really knows that can teach you what you need to hear because they don't know. They're not making any money. They might tell you they are. They might make you think they are. And I'm not saying that nobody on any of those forums ever make money, but I'm guessing most of them don't, not consistently, or they wouldn't be there. They'd be too busy making money because you can make all the money you ever want to make here. People ask me, why don't you go work for if you're so good at this, why don't you trade professionally for somebody? Why don't you work for a hedge fund? Think of all the money you can make. People that say that don't get it. Why would I want to go work for somebody and for a paycheck and have to, answer to somebody else? I can make all the money I ever want to make right here. It's like a ATM that you can just stop by if you know how to read it and work it and take money from it every day. It's really that simple. It's not that hard to do. It takes a long, long time to learn it. It does. And most people never get there because they don't take the time. They don't listen. They don't follow the rules. People ask me every day, why do you give this stuff away? Why is it so cheap? Why do you even bother teaching it to other people? Aren't you scared that you're going to mess up a good thing? You're going to mess up your cash cow, your ATM? No, because most people they're not even going to follow the rules the way I teach them. They're going to try to change them. They're going to try to monkey with them. They're going to think they're smarter. They're going to read somewhere. They're going to keep reading somewhere else. They're going to try what we do once or twice, and it doesn't work, and so they think it doesn't work and they give up. But it's not that it doesn't work. The problem is they're looking for the Holy Grail, and there is no Holy Grail. The Holy Grail is hard work and years of experience and watching this stuff happen every day. That's the only Holy Grail there is in trading. This market is not rigged. It has a purpose. It's going somewhere every day. It's doing something every day, and it's traders that make it do that. All this is on this chart is a picture of what the majority are doing every day. That's it. It's emotional. Most of it's emotionally driven, and this is just a picture of people's emotions every day, and that's what it is. And it's not rigged. You know, I've heard that so many times, and I used to believe it because I couldn't figure it out. But once I figured it out, I know it's not rigged. This market's going somewhere every day. I don't know if it's going up. I don't know if it's going down, but I know it's going somewhere, and I'm going to go with it. It's that simple. So I'm getting way too deep here. Too much on my soapbox. 15 minutes here, and we haven't talked about the first trade. Let's get on through this. Here's what I saw today. I came in about 7:15. The first opportunity I saw to go long was on this bounce off this trend line. This is a spike and channel. It's got a midline in it. This is a very simple pattern, easy to spot. I mean, the prices are going straight up. They're above the EMA. This is the first time all day we've gotten below the EMA. This is as easy as it gets. Doesn't get any easier than this. This was the first trade I saw. There's multiple reasons to enter here. Check this new low out. First entry short, second entry short. Even though that would have been good for a scalp, on a bigger picture, it's a failed second entry short. You know, You gotta, there's always, I mean, that's why price action works on any price level, because you just see bigger, this is just a bigger failed second entry. Notice how it didn't go very far. It bounces right off the trend line. Just get along right there. It's a breakout pullback long because of all these matching highs across here. It's higher highs and higher lows. It's just another pullback correction to the EMA. Get long right there. And that one trade, runners, you ride it all the way to the top. And notice how this is what I was looking for a top. Then I thought, well, maybe it's right here. But notice how that doesn't really, it does kind of fit right there. I guess it does. But you got this price action up here. And once we kind of go through that, then you realize we're probably headed for some kind of high up here. You don't know exactly where it's going to be, but it's lately, this stuff is usually off the closes. You draw that off the close, and you can see that's right where we went to. So you can ride this all the way to this high, at least 2 legs up. At the very least, you should have measured this leg right here and said, I'm going to hold this thing and I'm not exiting until we get there. And look where that gets you out, almost the top, right where it touches that line. And again, you don't know exactly where that line is until you get a little price action to verify it. But then we tried to go higher and then it corrected. So that should have been your first target. Stay with this trade until you start to see that overlap right there and then exit. And so that one trade, or actually that was when you entered here. I'll take that back. This first trade, you don't really, you would have had this line. I would have exited when you touched that line. So I'm getting ahead of myself here. I apologize. But once you entered right here, that should have been your target on that one. And even entering right here, you might have used this as a target and then pulled it right here. And you see it, that's exactly where it goes to the tick. Look at that. You got that move right there. Actually, if I put that right on there, it looks like it's about a tick shy. And when you get it right there, that should be your target. That's right on. I mean, it looks like they got one extra tick. So that's how you find where you want to try to hang on to. And then you get another entry here. That's just a 2-legged pullback in an uptrend. And this is a strong move. And that's when I'm looking for that next leg up that's equal. And you saw where it went to. That was to right in here. But notice this new swing low here. It's lower than that. And then you get 2 legs down. And so this low is really even lower here. But that's like a little correction right there. And you're looking for something off this line here. I almost made this one green. It's a little bit aggressive. But it's like a little trap right there. And you're probably going to, and you know your measured leg is way up here, so there's plenty of room to scalp out, and, you know, maybe you even get some more. You never know. And then you get this pull back to the EMA right here. This one I made green. Let me move this out of the way, and I'll explain to you why. We aren't back to the main trend line, and after coming off the high, the odds are we're probably coming back to that trend line. But there's a trap right there, so an aggressive trader is going to try to get a scalp off that trap. Just going to tell you that most aggressive traders in an uptrend like this, they're going to take that trade. Notice, see that right there, all those matching lows and that one little tick lower, and then it turns up and breaks out the other side. I would have had a stop sitting right there, and you take that trade. And notice if you kept your stop below the signal bar, that's the safe spot. That's where that's the only place that stop can go, because look, prices did come back and they got really close, but they couldn't get below that signal bar. That's because that's a key. You're using that price structure to help hide your stop. But if you put it anywhere else, you got stopped out. So that's why you got to follow the rules, going back to the rules. But that trade worked out. And then also notice how it came back and touched that same identical low right there and turned back up and gave you a second entry. That was the safer bet there, because I really thought there was a good chance we were going to come back down and touch the trend line down here. But because of that trap, an aggressive trader is probably going to take a chance on it right there. And but on the second entry, I think it was good enough to go with it, especially with that nice signal. You know, it's a nice signal bar. And Let me move that back out of the way. And this is one you might have used because there's a little bit of overlap there. You might have said, hey, when it breaks higher, I'll drop a limit order right there at that last close. And you would have got filled right there to that point. That's the most it would have backed up, and then it takes off. This is a strong trend. They don't reverse on a dime. Even if they're not going to go higher, you're probably going to get a chance to get out. So two great trades there. And then guess what? We finally get back over to the trend line. You got a new high right here. It's just 2 legs back. Look at that reversal bar. It touched that trend line, and that's immediate rejection. Just put a stop right there and go long above that. Quick, easy scalp. And then it comes back, and it gives you that same second entry, just like right there. It's just kind of a repeat pattern. Gives you a second entry. This one's a little different because it's real close to the high, but it's coming off of this trend line. The trend's straight up. Everything's above the EMA. It was just time for a correction back to this trend line. So this is one where the bar is not real. Both of these you might have used a limit order. This one, I think I used a limit order on this one. Actually, this is where I was done with my trading, and I took the 2 quick trades. I'm pretty sure this is where they're at. And I think I used a limit order there. I did on one of them, and then the other one I think I just put a stop. And but I'll put those trades on here in just a minute. And that's really all I've seen since then. We've kind of slacked up. We've finally got a break of this trend line, and we may have another trend line down here, may be the whole issue. On a bigger picture, this may be the trend line down here, and there may be a bigger midline in there. I still like this as a spiking channel. We'll just have to see how it works out. But my guess is at some point here, we'll make a run up and a new high on, but it's not time yet. You see, we're still correcting, and so don't be antsy to enter. Just wait on the right setup. We may have had that. We may already have a break and a new low, or it may be. Let's try to see what we get off the lows. You know, that's what I'll usually do when I'm not sure. I'll try to find the trend off the lows. That looks pretty good. Let's copy that and move it up. And so we got a little channel working down there. It might be a little bit tighter than that, like so. So it's not time to go long again yet. You got to wait on the price action to tell you. And it's not telling you to go long yet. You can see that real clearly there. So I hope all that makes sense to you. This video is getting long, but that stuff I shared with you early on was pretty important. Let me put the 2 trades. I finished all my regular trading, and then I did this a couple of days ago. And let's just do it again. Let's put the trades on there. I'll show you even coming in and starting later, you can take a couple of quick trades, and there they are. I took this first trade right here. This was too aggressive to take like that, so you take this one, and you see a quick, easy scalp. It went much higher, so runners would have been really good on this one. And then you get that pull back to and there's that, one tick above that one. Quick, easy scalp. Notice that too, how it got just enough, and then it pulls back and it gets all the break-even runners on that one, so no runners on that one. Then it takes off again, but just jump back in again. Or scalp out and then start a new one right here. And this one, they didn't come back and get this one. Look at that. So it's usually the other way around. Usually the most aggressive trades, but in this case, it was the 2 aggressive trades. They came back and got the runners, and the second entries, they didn't. So you can see that I entered. So starting at, you could have come in today and started trading at entries right here, 9:30, and exited 10:12. So 40 minutes, make $200, and where else can you do that and make $40,000 a year in an hour's worth of work? And I show that, and I actually took 1 trade. I was going to try to do 2 on Friday, and I got done, and I needed to get out of here. But I even took 1 trade, and I didn't even share it with you. I forgot about it, but there it is. Shorted that one right there. And I was going to try to get another one and show you another 2 trades, but I was done so I was done with my trading that day by, I don't remember what time, but obviously at least by 11:30, because I started doing some demonstration trades at that point. So this stuff is not that hard. It's really not. And you don't have to make a lot of money to make a good living doing this. And so, I mean, I've shown you 2 out of the last 3 days how you come in. Actually, going back here now, that's 3 out of the last 3 trading days, how you can make at least $100 every day. And on 2 of those days, I made $200, and one day it was $100. So this is not that hard to do. And I mean, if you have the patience, you can sit here and pick out 1 or 2 good trades every day and make a living. You don't have to take every trade. I mean, that's what gets people in trouble, being antsy and eager to enter this market. And being antsy and eager and emotional, uh, you're going to be a loser. I can tell you that right now. You have to get to the point where it's not emotional for you. You enter, it's a job. You enter, you're either right or you're wrong. And if you're right, you take your money and you move on to the next one. If you're wrong, then you reevaluate why. Wait till you probably want to wait till the end of the day. If you get a couple losers in a row, then something you're off that day, or the market's more difficult. Close up shop and don't come back till tomorrow. And then spend the rest of the day studying that market and those trades and what went wrong and what you could have done different. That's how you get better at this. Trading doesn't make you better. I've said that so many times, but people just come in and they trade every day and then they close it up and they go home and they can't figure out why they don't get any better. But trading does not make you better. What makes you better is studying your trading and studying the chart at the end of the day, figuring out why some patterns work and some patterns don't. And so anyway, I'm going to wrap it up for the day. This is almost 30 minutes, but this is good stuff. I hope you learned something from today. I hope you can take something out of what I said, even if it's just one little piece. It's probably worthwhile. But take it, apply it to your trading. But if you don't do anything else, follow the rules. That's real important. So I'm going to wrap it up. It's Mack with PriceActionTradingSystem.com, and we'll see you next time.